Brethren, sistren, do not be dismayed. It looks like there's a potential for gold to head lower. According to Bubba Horowitz here on Kitco, he's eyeing the 1750 level, but I want us to keep the eye on the prize because if this were to happen, it is a short-term issue. Now, why do I say that? Obviously, the past couple of days I've been talking about stimulus on and on, but I also want to talk about other catalysts for inflation, which will help gold's case. Now, obviously, we know silver and platinum are doing well. He mentions them here in this article by saying silver and platinum are in a solid uptrend with no signs of weakening. But here he says the trend is clearly lower. Gold is headed to the 1750 and 1700 level. So why do I feel so confident about gold's performance this year? Well, take a look at this. As you can see here, this is within the United States, but I actually hadn't looked at this in a very long time, but the cases have dramatically fallen off while we are still in the thick of wintertime here within the United States. I'm talking, this should be the time when people are still getting colds and flus and stuff, and we should still be seeing cases somewhat high. But as you can see here, pretty much right after early January, we started to see cases just dramatically drop. I'm talking about a huge drop. And as you see here, as it was chugging higher late last year, it went up, down, up, down, up. So, it was just kind of doing a nice solid just peak and trough motion. But this is very different right here. There's a huge slide here. So what does that mean? Well, it's not just the United States. Take a look worldwide. Worldwide, pretty much in January down, we're starting to see a huge slide down. So why do I feel confident about this? Well, as far as economies reopening, this right here should give us some feeling of positivity here that we should start seeing economies reopening. Now, why does that matter? Well, for us here in the United States, it's because we're starting to see the signs of life within the economy starting to pick up again. And this is what's going to help us lift up inflation pressures, which will help gold prices rise in 2021. Take a look here. As we start out the year, we hit a peak here in the market manufacturing PMI. I actually like looking at the ISM a bit more, but this is a nice one as well. And it started to trend slightly down, edged slightly down in February to 58.5 from 59.2 in January. So barely edged down. And as you can see here, it says, although expansions in production and new orders softened, rates of growth were still steep overall as manufacturers noted stronger client demand. Now that's key. Doesn't matter if you have a lot of supply, but if you don't have a lot of demand coming, good luck with inflation pressures. Now take a look here. This is even more key. Longer lead times also led to declines in stocks of purchases and finished goods. As a result, cost burdens were pushed higher. The rate of input cost inflation was the sharpest since April 2011, and output inflation the fastest pace since July 2008. Why does that range, that period of time, make my spidey senses go off a little bit? Well, take a look here. Now, this is input cost inflation, obviously, on the producer side of things. This more so relates to CPI, so a different measure of inflation. So just, keep that in mind. But this is the annual CPI rates from 2011 to 2021. As you know, it edged down, and around this time, this is where we had that, huge spike to the upside for gold and silver prices. This is around the time silver hit $50 and gold hit 1900. Now, obviously, this is where we are right now. For 2021, we're at 1.4 for the CPI. And for 2020, the whole year we had around 1.4. Now, this is important because in 2018, we had a rate of 1.9. Now, let me ask you, if cases are coming down, if economies will likely begin to reopen with more distribution of the shot happening, with manufacturing PMI rising, and I just showed the United States. Germany also put out their numbers recently. The UK did as well. Positive information coming from their manufacturing sector as well. You tell me, should we have a higher CPI by the end of this year, higher than 1.4? I definitely think so. And I think it will likely get higher than 2, maybe even higher than 2.5. Who knows? But this is where we're looking. This is what we're hoping for. We're hoping for 3. And if we get that 3 in the CPI, that will be fantastic. And remember, we have a federal funds rate of near zero. And during that time in 2011, that's what we had while we had the CPI at 3. Now, remember, the Fed also said they're going to let inflation run hot just so it averages out to around 2%. So keep all of that in mind when it comes to gold. So yes, even though gold may have the potential to edge down lower in the near term, do not forget keep your eye on the prize. There's a lot going for the price of gold with all of these macroeconomic catalysts and just general catalysts within the news that will help inflation prices. So guys, let me know what you think in the comment section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.